Welcome back, everybody. Today, we're going to be diving into something really fascinating. It's changing the game in Forex trading big time.
Algorithms.
Algorithms, yeah. I was reading that some traders using these algorithms are seeing, get this, 23 to even 35% better returns.
Yeah, it's pretty amazing.
Imagine that, your trading system, like learning and adapting in real time as it goes.
Right.
So, as a Forex trader myself, I'm thinking, how can I tap into that? How can I use that power?
Well, and that's a great question to start with, because a lot of the talk about algorithms seems like it's only for the Wall Street guys, for the hedge funds with millions to spend. But the truth is, things are changing quickly, and it's becoming much more accessible to, retail traders.
Okay, so let's break it down then. What exactly is algorithmic trading, especially when we talk about Forex? Like, how complicated is this stuff, really?
It sounds really intimidating, I know. But the idea is pretty straightforward. Algorithmic trading is basically using computer programs, to make and execute those trading decisions based on rules that you set. So think of it like having a super focused trading assistant that's working 24/7, never gets tired, never gets emotional, just follows your plan.
So it's more than just setting up like a simple buy or sell order, right, at a certain price.
Oh, yeah, way more. These systems are way smarter than just basic orders. The really interesting part is they can analyze market data, learn from it, and then, get this, adjust their strategies as they go. It's like having a trading strategy that's constantly getting sharper and evolving.
So is that where I always hear these terms, machine learning and, computational decision matrices. Is that what we're talking about?
Yeah.
I've got to admit, that stuff sounds a little overwhelming.
I get it. But think of a computational decision matrix like this, okay? Imagine a program that can analyze a ton of data, everything from price changes to global news, even sentiment on social media, all that stuff.
Wow.
It crunches all that data at lightning speed to find patterns and then make decisions. But it's based on the criteria that you set.
So the data is like fuel for better decisions.
Exactly.
That makes sense. Okay.
Yeah.
But why is speed so important when we're talking about Forex? It's not like we're physically racing each other on the floor of the stock exchange anymore.
No, you're right. It's not about being the fastest clicker. It's about reacting to market changes. And sometimes these changes happen in milliseconds. A news event, an economic report, these can shift a currency's value almost instantly while you're still reading the headline.
Right.
An algorithm could have already, analyzed it, made a decision, and executed a trade, all based on your strategy. That kind of speed, that can be a huge advantage.
Can you give me a real-world example so I can, really picture this in action?
Okay. Let's say there's a surprise interest rate hike, and it's announced by, a big central bank. So that news hits, and, immediately, within seconds, that country's currency starts to climb.
Yeah.
A human trader, even a pro, it takes time, Read the news, figure out the impact, then decide to buy or sell.
Right.
But an algorithm, it can react like that. If it's programmed to buy when the rate hits a certain threshold, boom, it's already made the trade.
Wow. That's pretty impressive.
Right.
And a little intimidating. It kind of makes me feel like my human brain is working in slow motion.
Oh, don't worry. Human intuition, it still matters a lot, especially when you're setting up that initial strategy. But recognizing the speed, how fast things move, that's really key today.
So, okay, this all sounds incredible, but let's be real for a second. I know I've made some pretty bad trading decisions, sometimes, based on fear or getting a little too greedy. Can they help with that human element? I know I could use some help.
That's actually one of the biggest advantages of using algorithms. They completely take emotion out of the equation.
Oh, really?
Remember, they're programmed to follow the strategy, your strategy. Even when the market gets all crazy and volatile and your gut is telling you to do something, maybe irrational,
So no more panic selling when things dip.
Oh,
or holding onto a loser for way too long, hoping it'll come back.
Exactly. The algorithm, it just executes the plan, no matter what you're feeling. And that kind of discipline, that can be really hard for us humans to maintain, even if you're experienced.
Yeah, for sure. You mentioned that these algorithms can learn and adapt. That's the part that feels almost like sci-fi to me. How does that actually work?
Yeah, so that's where the machine learning comes in. These systems, they can find patterns in the data. Sometimes they're so small we'd miss them, But they're constantly analyzing the market and refining their strategy. It's not just about following a fixed set of rules.
Right.
It's about evolving, as the market changes.
So it's not like you set it and forget it. It's more like ongoing training.
Yeah, exactly. coaching for your strategy. And they're always evolving, always getting smarter, more accurate with each trade. They can identify those trends and adapt to those changing market conditions much faster than any human could.
That's impressive.
Yeah.
A little unnerving, to be honest. It makes you wonder if we even need, like, human traders in the future of Forex.
Yeah, that's a great question, and one I think we should definitely dive into further. But maybe for now, let's focus on how you, as a Forex trader, how you can use these tools to your advantage.
That's what I'm really interested in. So if I'm not, like, a tech expert,
Yeah.
how do I tap into this algorithmic power? Do I have to, like, build my own robots or something?
No. You definitely don't need to build your own robots. That takes serious programming skills. But thankfully, there are a lot of trading platforms and tools out there now, even for, individual traders.
So you're saying I could essentially, like, outsource the heavy lifting to the tech?
Exactly. You can find platforms with pre-built algorithms that you can tweak to, fit your risk tolerance, how much you're comfortable with your trading style. Others have tools to help you build your own without needing to write code.
Okay. That sounds a little more manageable.
Yeah.
But let's be realistic here. I'm always wary of anything that promises, like, easy profits in the market. How do these systems handle risk?
Right. That is a crucial question. And it's important to remember, no system can completely eliminate risk.
Wait.
But these algorithms, these advanced algorithms, they're designed to manage risk effectively. It's like a core part of how they're programmed.
Okay, but how do they do that? What are the specifics?
So they use some really sophisticated models to analyze, predict potential losses.
Okay.
Like one example, they can run something called probabilistic outcome analysis, which is basically they're creating these different potential market scenarios and assigning a probability to each one. So it's not just one prediction, it's considering a range of possibilities.
So instead of putting all their eggs in one basket, so to speak, it's like hedging its bets.
Yeah.
Looking at those what-if scenarios.
Yes. Exactly, like having a built-in risk manager who's constantly evaluating, adjusting the strategy, all based on real-time data.
This all sounds a little too good to be true.
Well,
but I'm sure there's still some challenges, right? Some limitations that we need to consider.
Of course. Of course. Algorithmic trading, it's not a magic solution, You've got to understand the capabilities and the potential drawbacks before you jump in.
All right, so let's dive into those challenges then. What are some of the things that, traders really need to be aware of when they start looking into algorithmic trading?
Well, one of the biggest challenges is what we call over-optimization.
Over-optimization. Okay.
Yeah. And that's when an algorithm is like so finely tuned to the historical data,
Right.
It performs amazingly in backtests, but then it completely fails when it hits the real world.
So like the student who aces all the practice tests but then chokes on exam day.
Exactly. It's crucial to find that balance, testing past performance, but also making sure that it's robust enough, that it can handle the real market, how unpredictable it is.
Makes sense. What else should traders be, looking out for?
Another important thing is the ongoing maintenance. Algorithmic trading, it's not set it and forget it.
Right.
The market is constantly changing, so you have to regularly review and adjust. Otherwise, they won't be performing optimally.
So it's like tending a garden. You can't just plant the seeds and walk away. You got to water, fertilize.
That's a great analogy. It takes active involvement, that willingness to adapt with the market.
That makes sense. Now, before we move on, there's one more thing that I think we need to discuss. This kind of ties everything together.
Okay.
We've been talking so much about technology, but ultimately it's still us, the humans, right? We're the ones who are making the decisions about which algorithms to use, how to set them up.
That's 100% right. Even with all these advancements, it's still your judgment, your expertise that really matters.
So it's not about replacing humans. It's more about, like, amplifying what we can do with the right tool.
Precisely. The most successful traders, it'll be the ones who can combine their own skills, their knowledge, with the power of this technology.
That's a good thought. It's not, human versus machine. It's human and machine working together.
Exactly. The future of trading is going to be finding that sweet spot where human intuition and the computational, the precision of the algorithms work together.
Well said. Now, before we get too far ahead of ourselves, I think we need to take a step back and really look at how you as a Forex trader can start using these tools, how you can actually integrate them into your own strategy.
Yeah, and it really is about finding those right tools, those right algorithms, and then figuring out how to blend them with your trading approach. It's not just about, handing over the reins and letting the computers do everything.
So, okay, Let's say I'm ready to dip my toes in, to this algorithmic trading world. Where do I even begin? What are the first things I need to think about as a Forex trader?
Well, I think the first thing, and this is really important with any kind of trading, is to define those trading goals. What are you hoping to achieve with this? Are you looking for those quick profits? Are you thinking more long-term growth? Something else entirely. Having that clear vision will help you make the right choices.
Yeah, it's like any journey. You got to know where you're going before you can map out the route.
Exactly. Once you've got those goals, then you can start digging into the different, the algorithmic trading strategies, the platforms. There are so many options out there, it can be a little overwhelming. So finding one that fits how you trade and, your risk tolerance, that's key.
This is where it starts to feel overwhelming, right? There must be tons of different algorithms out there. How do you even choose?
Oh, absolutely. It's constantly changing, too. New things are popping up all the time. But don't let that scare you away. There are resources, ways to figure this all out. Some platforms, they offer pre-built algorithms, and they're designed for specific, trading styles or specific market conditions. That can be a really good way to start if you're new to all of this.
You don't have to be like a master coder to get started.
No, not at all. A lot of these platforms have very user-friendly interfaces, click and drag, drop-down menus, things like that. Some even let you build your own simple strategies without writing any code.
Okay. That makes it seem a little more accessible, a little less intimidating. But even with those, user-friendly platforms, I'm guessing there's still a learning curve, right? How much do I realistically need to know? How much skill do I need to have to be successful with algorithmic trading?
Yeah, you're right. It's not like one of those get-rich-quick schemes. You're going to have to put in the time and effort to learn how it all works. You need a solid grasp of, the market fundamentals, technical analysis, risk management.
So it's not just a matter of setting up the algorithm, letting it run wild while I, lounge on the beach sipping cocktails and just watching the money roll in.
Oh, I wish it were that easy. Definitely not. You need to be actively monitoring, optimizing as you go. The market conditions are constantly changing, so you have to be ready to adjust. And of course, risk management. That's always going to be a factor.
Are there any common pitfalls that you see? Like mistakes that new algorithmic traders often make when they're first starting out? Anything we should be looking out for?
Yeah, definitely. I think one of the biggest traps that people fall into is, we talked about over-optimization earlier.
Right.
That's when you kind of tweak the algorithm so it performs perfectly on past data.
Yeah.
But then when you hit the real live market, it totally falls apart.
It's like that student who aces all the practice tests and then bombs the real one.
Exactly. You got it. So it's really important to test those algorithms on new data. Not just the data you used to build it, And be realistic. Don't expect perfection. Another common mistake is, just neglecting the risk management side of things. Because algorithms, they can amplify your profits, but they can also amplify your losses. So having those strong risk controls from the very beginning, that is crucial.
So don't bet the farm, so to speak. Don't go all in on your first algorithmic trading adventure.
That's good advice. Start small, gain experience, gradually increase your exposure as you get more comfortable. And always have an exit strategy. What are you going to do if things start going south?
Okay, taking notes. So we've talked about the now, but what about the future? Where do you see, algorithmic trading heading? What's coming down the pipeline in the next few years?
It's changing so rapidly. It's really mind-blowing. Advancements in machine learning, artificial intelligence, cloud computing, all of that is pushing the boundaries of what's possible.
So can you give me some specific examples? How are these technologies actually being used?
Yeah. So machine learning algorithms, they're being used to analyze these huge amounts of data. And I'm talking about, news articles, social media posts, forums, all that unstructured data. They can pick up on these subtle shifts in sentiment and, identify those trading signals that we might totally miss as humans.
It's like having an army of analysts out there just constantly reading, scouring the internet, trying to figure out where the market is headed.
That's a great way to put it. And then you've got the AI, right? We're seeing AI being used to develop algorithms that actually learn and adapt in real time.
Yeah.
Without any human intervention. That's some next level stuff.
Wow. Okay. So we've got machine learning, we've got AI. What about cloud computing? How does that fit into all of this?
Oh, cloud computing is a huge game changer because it's giving, all traders, no matter how big or small, access to the computing power that you need to run these sophisticated algorithms. Before, that was only available to, the big players.
So you're saying that even, a retail trader like me,
Mhm.
I could have access to the same level of technology that, like, a hedge fund was using a few years ago.
That's exactly what's happening. And it's
Mhm.
really democratizing algorithmic trading, which is really exciting.
It's exciting, but it makes you think, what about us human traders? Are we going to be, obsolete, replaced by robots?
Yeah, it's a question a lot of people are asking. Personally, I think human traders will always have a role to play.
Why do you say that?
Well, because algorithms, they're amazing at the data, the executing, but they lack the intuition, the creativity, that adaptability that humans bring. We can see the big picture, understand the nuances of the market,
Right.
and make those, strategic decisions that a machine just can't do.
So it's not humans versus machines. It's like humans plus machines, right? We can work together.
Exactly. The best traders, it's going to be the ones who can combine their skills and insights with the power of the technology. Algorithms for the routine stuff, the data-driven insights, but using their judgment and experience for those big decisions.
That's a really good perspective.
Yeah.
So it's not necessarily something to be scared of. It's an opportunity.
Absolutely. And I think, this collaboration, it's going to lead to a more efficient market, a more transparent market, a more accessible market for everybody.
That's a great point. So, before we wrap up this part of our deep dive, I want to make sure our listeners, they're walking away with some practical things that they can actually do, right? Some actionable steps. If they're interested in exploring algorithmic trading, what are some things they can do?
That's a good question. First, just start by learning. Get those basic concepts down, the terminology. There are tons of great resources out there online, in libraries.
Any recommendations? Any places that people can go to start their research?
Oh, yeah. There are a bunch of really good websites. They offer these introductory courses, tutorials on algorithmic trading. You can also find some good books, articles written by, experienced traders.
All right, great. What else?
Once you have that foundation, that basic understanding, then start exploring the platforms. A lot of them offer demo accounts, so you can practice, virtual money before you risk your real capital.
That's a good idea. Kind of test the waters before you jump in, right?
Exactly. And then finally, connect with other traders, Find those online communities, forums, even some in-person meetups where people share their experiences, their knowledge. It's really helpful to learn from others who are already doing this successfully.
Yeah, absolutely. It's always good to get those different perspectives, right?
Absolutely. There's a really vibrant community out there, and they're incredibly helpful. Don't be afraid to ask questions. Learn from their mistakes. Learn from their successes.
All right. Well, you've inspired me. I'm ready to start looking into this myself.
It's a fascinating field. It really is. I think you'll find it really rewarding.
Well, on that note, I think it's time for us to move to the final part of our deep dive. We'll be right back, and we're going to explore some of the more, advanced concepts, advanced techniques in algorithmic trading. Buckle up. Welcome back, everyone. We're in the home stretch now of our deep dive into algorithmic trading. And, we've covered a lot of ground, how these systems work, the benefits, the things to watch out for. But there's one thing that I'm still kind of stuck on. It's those computational decision matrices that you mentioned earlier.
Yeah.
They sound so complex.
They can be.
Yeah. Can you, break it down for me? And, for our listeners who might be trying to wrap their heads around this.
Sure. I mean, the core idea, it's actually pretty logical when you think about it. Think of them like frameworks. And these frameworks, they help the algorithms analyze, all that data, tons of data, and then make the trading decisions, but based on, your rules, the rules that you set.
Okay, so maybe instead of picturing a robot, I should be thinking more like a really, really powerful spreadsheet.
Yeah.
But obviously on a much, much larger scale, right?
Right.
And more dynamic.
Exactly. But instead of just rows and columns, like a regular spreadsheet, these matrices use intricate algorithms. And these algorithms factor in tons of variables, from price movements, economic indicators. They can even look at things like social media sentiment, news headlines, all of that.
Wow. That's crazy, just the amount of information they're processing. No wonder they can react so fast.
Yeah, exactly. I mean, that's one of the biggest advantages of using algorithms in Forex, right? They can process information so much faster, more efficiently than any of us could. And that speed can be the difference between, making a great trade and completely missing out on the opportunity.
Okay. But how do they actually, make the decision? Because they don't have intuition or experience like a human trader does.
That's right. Their decisions are based purely on the data and the rules that you program into them. So, for example, you could set up an algorithm to, automatically buy a currency pair when it breaks through a certain resistance level, or sell when it, drops below support.
So it's all about identifying the patterns, the trends in the data, and then acting on them.
Exactly. And the more data they have access to, the more accurate they become. It's a constant learning process.
Which brings me back to something you said before about that learning aspect. You said they can adapt, they can improve over time. How does that work?
So that's the machine learning part. These algorithms, they're not just static. They're designed to learn from those past trades and refine the strategy.
So they're constantly, studying, getting better at their job, so to speak, just like we do.
Exactly. That's a great way to put it. With every trade, they're gathering more data and they're fine-tuning their models, getting better at spotting those potentially profitable opportunities.
That's really incredible. It's like they develop their own mind almost.
Yeah, in a way they do. But I think it's important to remember that they're still tools. Their success really depends on the trader, the human trader, who's setting them up and managing them.
Right. So it's still up to me, as the trader, to set those goals, define those risk parameters, and then, of course, monitor how it's performing.
Exactly. It's not just a hands-off approach. It takes active involvement, a willingness to learn, and that understanding of the market. That's always going to be important.
So let's talk about some of the more advanced techniques. I always hear these terms thrown around: high-frequency trading, arbitrage. What do those mean? And are those things that, someone like me, a retail Forex trader, could actually use?
Great questions. So high-frequency trading, or HFT, that's a technique that uses incredibly powerful computers, to execute a huge number of trades really, really fast. We're talking fractions of a second.
Wow, that's fast. So what's the point of trading that quickly?
Well, what they're doing, these HFT firms, is they're trying to exploit these tiny price discrepancies. And these discrepancies, they might only exist for milliseconds.
Wow.
So they're basically, super fast scale, squeezing out these tiny profits from those price differences.
That sounds like something you need a whole team of engineers and, millions of dollars worth of equipment to do. Not something that I could do from my home office.
You're right. Traditionally, yeah, HFT needed huge amounts of computing power. But some of the retail platforms, they're starting to offer features that let, individual traders get in on the action. Maybe not on the same scale, but, it's worth looking into if you're interested in that kind of, super fast trading.
It's interesting. What about arbitrage? Is that something that's, realistic for a retail trader to use?
So arbitrage is basically you're taking advantage of price differences. But for the same asset, but in different markets. Like, for example, a currency pair might be trading at slightly different prices on two different exchanges.
Right.
So an arbitrager would buy the currency where it's cheaper, sell it where it's more expensive, and make a profit from that difference.
That sounds like free money. Is it really that easy?
Well, in theory, yeah, it sounds great. But in reality, those opportunities, those price differences, they're usually very small. And they disappear really, really quickly. So you need, sophisticated algorithms to spot them and then to execute the trades fast enough to actually, capture that profit.
So not exactly something that you can just, set up and then go on vacation and come back and be a millionaire.
Probably not, no.
Yeah.
But it can be a really profitable strategy for, first skilled traders who are using algorithms.
Okay. So we've covered a lot today, a lot of information. Can we maybe take a minute to just recap some of the key takeaways, for our listeners who might be feeling a little overwhelmed right now?
Sure, absolutely. I think, the most important thing to remember is algorithmic trading, it's a tool. It can be a really powerful tool, but it's not, some magic get-rich-quick scheme. You've got to have the knowledge, the skill, and that willingness to, always be learning and adapting.
Right. Don't believe the hype.
Yeah. Exactly. And second, I think, before you even start, you got to figure out what your goals are, what your risk tolerance is. Are you comfortable with big swings? Do you want something more steady? Then research. Look at different platforms, different strategies, and find the ones that fit you.
And don't forget those demo accounts.
Yeah.
Practice before you use real money.
Yeah, exactly. Get comfortable with the platform, how the algorithms work, all of that before you risk your capital. And then finally, stay curious, keep learning, keep asking questions. The world of algorithmic trading is constantly changing, so you've got to be ready to keep up.
Great advice. Well, we've reached the end of our deep dive. And I have to say, I've learned a lot.
Me too.
I think the biggest takeaway for me is that, algorithmic trading, it's becoming more and more accessible.
It really is.
And that opens up incredible opportunities.
Mm.
But with those opportunities, of course, come challenges and responsibility, right?
Right.
It's up to each trader to decide if this approach is right for them.
Well said. And I think, going forward, the traders who can figure out how to combine their own intuition and experience with the power of these algorithms, those are the ones who are going to be really successful.
Absolutely. That's a great note to end on. So thanks to everyone for joining us on this deep dive into algorithmic trading. And remember, keep learning, keep exploring, and happy trading.
Happy trading.